If you take the government's information at face value, you are definitely not getting the whole story. That's why you came here. In fact, in today's video, I'm going to show you pieces of anecdotal evidence that most people have never even heard of before. So I'll show you that and then connect it in with what's going on at the central banks, because that is everything. That's the center of this all. I'm going to then show you some other details related to the economy and how, in some places around the world, what we are about to see will be historic. This is one you don't want to miss. I'll try to move through it as quick as I possibly can, beginning with beer. What crappy beer demand tells us about the economy. You can see the way, and I'll show you this article and the next, the way that buyers have changed their purchase patterns, the way the consumer has altered their behavior is a piece of anecdotal evidence. They are not purchasing what they did before. You see, a lot of people, I've seen it in your comments, I've seen articles about it, I've seen it at the stores. What people are doing now, they might go to the supermarket and let's say they love that cereal for their kid because it's got the funny, rabbit on the front, and it's so good because the advertisements, sell it to them. And directly next to that box is another box that looks kind of the same, except it's really just generic. It's a no-name product containing the exact same product on the inside of it. And that no-name product is, let's say, 10% cheaper, 20% cheaper, whatever the number is. That is something that people have started to shift to. They are changing their buying patterns as a result, not because for fun, they're doing this as a result of what's happening. Tightening in the belt, basically. They're not having the amount of money that they did before. Disposable income declining, savings are declining, credit card usage is up, all of these things. We're noticing that with beer, but also, what about this? You've got to look everywhere. There was something that Alan Greenspan talked about, which is the underwear index. Yes, that's right. Funny thing, but check this out. Men tend to forego buying new underpants during a recession because it's less obvious to others when it's time for a new pair. You need clothes on the outside. And that just gives you a little bit of a look. They also talk about lipstick in here as well. People are, wearing the lipstick. The women have, maybe they can't go on this really fancy vacation. So that woman will put lipstick on. They'll buy lipstick because it's, I don't know how much lipstick is, let's say $10 or $20, and they can get a little bit of feel-goodness to them, but only spend a small amount. So the lipstick companies might do very well, cosmetic companies, because they might see a boost from this, while other things out there, maybe luxury vacations and luxury this and that, may not see as much funds go into them, although we haven't seen that part yet. The point is that average everyday people are changing their buying patterns. Whether it's underpants or whether it's lipstick and beer, it's all coming together. Valentine's Day chocolates, check this out. Stack fill is the new shrinkflation. They use this example of the Valentine's Day chocolates, but we've all seen this. It's basically shrinkflation. And that is the product. Let me show you the example they give you here. The product is basically used like all filler inside of it, and then you only get a handful of the chocolates. And this is actually considered to be a deceptive practice. Okay, and I do agree with that to some extent, that the customer doesn't know what 247 grams of chocolate is. Like, you just don't know. You're judging by the size of the package, and you can't open it up. It's probably sealed. So you go and buy it and you look inside, it's 2.5 chocolates. You're probably not very happy. Well, in this case here, they actually fined some of these companies. They give them a tiny little fine. Doesn't hurt them. But the point here is made, and that is the consumer is starting to feel it. The input costs for these companies, I'm sure, have gone up, but the shrinkflation is something that, in my opinion, is terrible, because we got to be real about this here. But they've done studies before, and it has shown that people are willing to accept a package that is shrinkflated instead of paying a higher price. Exact same per grams. They don't want to pay the higher price. they'll take the thing that actually contains less. Doesn't make sense, but that's the human psychology, okay? That's what we live through today. This is when it gets interesting. US begins allowing Medicaid money to be spent on food. The administration is allowing states to tap funds for nutrition to battle chronic diseases and improve health, saying, well, you've got people that can't afford to eat, so we need to expand the unfunded liabilities. That's what's happening today. These, in fact, all of what I've shown you are anecdotal pieces of evidence that all come together for those who stay and stick around with me. I know that there's kind of this disconnected feel sometimes, but I assure you there is a method to the madness. And this is what we have when the economy is not strong. Unemployment rate might be 3.4% in the United States, but that does not tell an accurate story of what's happening. And what is at the center of all this? What is it that is really causing this to occur? Let's begin by showing you this. It's talking about the Federal Reserve, central banks, their actions. The risk is that premature easing in financial conditions and in turn a pickup in growth expectations may be counterproductive from an inflation fighting point of view. Indeed, post the hot January payrolls report, a number of Fed speakers this week have talked up rates expectations, pushing back on Powell's dovish talk. As a result, the disconnect between the Fed's own rate forecasts and market pricing has noticeably narrowed, which has hurt US equities. That is absolutely the case. We have seen that this past week with the stock market didn't look as strong as the previous weeks. And what was that all about? Well, the market, starting from basically October 22, had been starting to suggest that in 1 year's time, like basically the end of 2023, there would be rate cuts. And Powell has been really soft. I mean, Pillsbury Doughboy soft, saying that, we're going to be real tough, I promise. But you can barely hear. It was kind of a whisper. Nobody really heard that. But then several members of the Federal Reserve came out and said, we got to be tough on this, and we're not nowhere near done. We do not want that second wave of inflation. In fact, for Kashgari and others, they were saying, we got to go above 5%. We got to leave them there for a long time. And we are concerned about this, this, and this. We're concerned about wages and so on. We want to make that very clear. And so markets are looking at that. But if you see what's going on my Twitter, I posted it, showing us the central bank's quantitative tightening that's going on. Compare that with the S&P 500, you always see a link. I call this the money mirror method. And if you look at what's happening with the financial conditions laid over on top of all that, well, then it starts to paint a picture. Let me show you another article basically suggesting kind of the same thing. These dramatic interest rate moves at the short end of the yield curve are a big step in the right direction. The market has started to listen, but rates still have a long way to go to reflect current conditions. Fed cut is a long way off. A robust economic data for January gives it even less of a chance. So they're kind of saying, we're still pricing that in. That's what the market is saying. But the market's looking hot in terms of the jobs market. Hey, there's millions of empty jobs. That's what they're looking at. They're looking at that number. They're saying unemployment is at 3.4%, that there's millions of empty jobs. So inflation, we got to worry about it. This is what they are saying. And so jobs are a big concern, but also when you see what happened back in 2020, where a whole bunch of people were unemployed, they were still buying. Like a lot of people had to buy stuff, but where were they buying from? They were buying from China. They were buying from China because China was doing the manufacturing. And you could see now they want to roll out a bill aimed at cutting manufacturing reliance on China, and they do so giving tax incentives, including depreciation, so extra depreciation on these buildings. And so this is something that could incentivize these businesses to, hey, instead of building that factory in China, why don't we build it here? And then you can employ people from the US. That would be positive. That is a good thing. The way that the tax system works, there are incentives there, but often look at what's happening with the oil and gas industry, look at what coal, look at other things. You can look at it and say, well, we need to do that. Well, I'm talking about economically only. That's what I talk about on this channel, okay? And so a company is not going to do any mining of coal because they're saying they're going to bankrupt us. So why would we do that? Makes sense, right? And look at what's happening here, because everybody talks about taxation as a salvation. But in fact, you got to understand that this was built to take from the middle class. This is very important. And there's a lot of people who would disagree. Put your disagreements in the comments, please. Check, please. Are IRS agents coming for servers' tips? Well, apparently, tips are already subject to federal income taxes. The IRS is proposing a new service industry tip reporting program and seeking the public feedback. It's not a new concept. It was proposed before and so on. Voluntary tips, okay? You're just going to tell the government about your tips. You're making minimum wage. You get the tips on top of that. The government wants to know about that cash. This is why they want to get rid of cash. They want to go to a cashless society. They want to have central bank digital currencies. And they want to make sure that you are the one that, those 87,000 IRS agents, they want to make sure that they're working hard, right? This isn't new, though, in terms of what's happening with tips. Toronto waiters will now be taxed on their tips, and they aren't happy, of course. This was back in 2022. I don't know if this exactly has all gone through, but the point here is that anything that you do is taxed. When they announce this, they are just really showing you where that tax money is going. Okay, it's so critical to understand this. There's a reason I mention this. For fear or money, consumer giants are staying in Russia. Procter & Gamble, Unilever, Colgate continued operations after the invasion. Companies at risk if the Kremlin adopts a wartime economy. We've seen this before, but I just want to show you the fact that these corporations, when they look at where their business is, they're not going to alter what they do. Okay, they want to continue to operate, and they want to continue to basically make their income, make their the corporate profits, keep their shareholders happy. That's why they have stock buybacks. That's why they do what they do. That's the only reason I mention that. It has nothing really to do with Russia, but they're always going ahead with what they believe is the best thing for their stocks. A lot of times that's firing people. That's what they're doing right now. We see that today. So apparently, the government is going to have a $27 billion green slush fund. So the slush fund money is now looking for a home. A battle is on over who gets to waste it. Well, they're joking around about that. But I highlight this for a reason. Because as an investor, even if you're not a professional investor, you got to look at where the government is putting that cash. Where they're putting that cash, it's kind of like easy wins, because a lot of times you could be in a recession. You could be in dire straits, but the government is just pouring money in. If you get one takeaway from that, you can look at where the government contracts are, and you could see who will be victorious, even if times are tough. That's the difficult part. Like, you can say, for instance, Amazon is everywhere. Everybody gets everything from Amazon. Therefore, it's the company I want to invest in. You could also say the fact that Amazon is at the same price it was back in 2018. But anyway, the point here is that, number one, not everything goes up forever. There's ups and downs. But also, you got to realize that if the government was throwing money in their direction for one reason or another, well then, they get to benefit from that, and the stock might go up as a result. You can do these things, and you can track that, and it starts to really, help you out, okay, financially. The devaluation run in emerging markets is just getting started. Indebted frontier nations need devaluations for IMF funding. Argentina, Bangladesh, Nigeria seem likely to devalue next. When they devalue, that hurts their economies. They're trying to basically be, I guess, a little bit, they're doing this for different reasons. I'm tongue-tied because I could tell you about the IMF and what they do. If you've read my 2 books before, you already know. Whenever I see the IMF, just read Confessions of an Economic Hitman. I think I'll leave it at that. But You can see that Argentina is buckling under the strain of $174 billion debt mountain, 100% inflation. They're being absolutely crushed right now. Currency devalued. Look at Lebanon. Look at all of these different countries that are really getting hit hard. All of this, at the center of it all, is what's happening with the central banks. What they do is number one, and when you watch this channel, you know each and every day their actions, their movements. I bring you the latest and greatest. What do you got to do? You got to hit that subscribe button down below, and you've got to continue to tuning in. That means actually going and searching for me. Likely you cannot find this just by going to your home feed. This, for whatever reason, I submitted a support ticket, not that anything will be done, to YouTube to try to investigate that, but we'll see. I'll see you tomorrow. Take care.